The current results in the property investment market may not appear very optimistic at the moment, but this is only a temporary situation. All market players were aware of the slowdown was to hit in the 2023. Total transaction volume in the CEE region in H1 2023 was coming to 2.2 billion euros, and it was a decrease of 59% year-over-year. Smallest change occurred in Czechia with 38%, and the biggest in Poland with 72% and Hungary 82% decrease. Despite the huge decrease in volume, Poland once again proved to be the most liquid market in our region, reaching a transaction volume of more than 800 million euros, realized in 33 deals. The biggest volume and number of transactions in the region. However, this is the weakest result for the first half of the year since 2015. The most active investors in Poland were those deriving from the US with 33%, CEE with 29% and Western Europe with 19%. The industrial segment was significantly impacted by the pricing clash in 2022. However, there was a slight improvement in the H1, and with 463 million euros transacted, the sector accounted for 54% of the total investment volume during this period in Poland. The retail sector's investment volume in H1 reached 175 million euros, marking the lowest H1 result since 2010. In 2023, investors were actively seeking new opportunities, primarily focusing on transactions involving both local shopping centers and those earmarked for redevelopment, as well as standalone retail warehouses. Currently, we observe investor sentiment coming back to convenience schemes. We have just closed the divestment of modern convenience schemes in eastern Poland and have several projects more in the pipeline. In the PRS sector, we witness an interesting trend, an increase in investors' interest in adapting existing commercial properties for new purposes, including those in private rented sector formula. Our technical advisory team examined some properties and identified that older office buildings, which often exhibit significant differences in standard compared to modern and energy-efficient Class A office buildings, in many cases might be relatively easily converted into residential function. Market prices are becoming increasingly favorable. Rental rents in Poland have not yet experienced a significant surge, and the solid economy continues to sustain cash flows. We anticipate that opportunistic and value-add assets will dominate the commercial real estate market in Poland across all sectors during the second half of the year.